Fleetpool ordered 50 million worth of Teslas. September 7, 2022. Fleetpool, a car subscription provider in Cologne, Germany, announced that it placed an order for over €50 million in Tesla vehicles this year. In its press release translated from German, the company said that its portion of EVs has grown to over 30% and is twice as high as the overall market. Fleetpool placed an order for several Tesla Model 3s and Model Ys and plans to offer them to both private and corporate customers. The company has its own brands to Drive, Easy Cars, and DBB Autoarbo, where it offers Tesla vehicles to its customers. The company also manages the Shell Recharge Auto subscription, and subscribers can choose a Tesla Model 3 or a made-in-Germany Tesla Model Y. Gert Schaub, Fleetpool's CEO, spoke of the investment in the new vehicles and how reducing the environmental impact is a top priority for the company. Schaub also said that $50 million invested during the first 8 months of this year reflected the success of the car subscription industry advancing electromobility. That statement suggests that this isn't a new order but one that was spaced out over the course of 2022. The purchase established Fleetpool as one of Tesla's largest German customers. The sum of €50 million that we have invested in new Tesla vehicles in the first 8 months of 2022 alone shows how successfully car subscriptions can advance electromobility. It is also proof of how the car business is changing. New drivers and new market participants can conquer the market more easily with Fleetpool, since our digital sales channels with flexible forms of use meet today's customer requirements. Because reducing the environmental impact of mobility is also a top priority for us. We are planning to purchase electric vehicles for 2023 with a total value of around €400 million. Earlier this year, Shell launched its dedicated EV subscription program that allowed customers to choose a variety of E-Versus. In Germany, Shell offers customers Tesla Model 3 Standard Range Plus, Model 3 Long Range Dual Motor, and the Tesla Model Y Long Range Dual Motor. Source reposted and summarized from John Kreider at Tesla RT. My take: that is a lot of Teslas. Hope it works out for them. Tesla 4680 battery ramp. September 7, 2022. It may come as no surprise that a panel of experts claims Tesla is struggling to ramp up the production of its new 4680 battery cells. This is because Tesla made it clear years ago, at Battery Day, that there would be challenges. Tesla's goals were likely too lofty. As now the EV maker is only about halfway through the process of rolling out its 4680 cells. According to experts, essentially, 12 industry experts with knowledge about Tesla's 4680 cells spoke with Reuters to share what they know and understand about the manufacturing process. Of the 12, all have some connection to Tesla, and 9 were said to have very close ties. The consensus among the experts is that Tesla is still having issues scaling its 4680 battery program. The company is reportedly benefiting from the larger battery cells, but hasn't yet ramped up the tricky cost-saving manufacturing process. Without both the larger cells and the new efficient manufacturing technique, the cost savings cannot be fully realized. When, and if, Tesla gets to the point that it can successfully scale the new battery tech, it will reduce costs, make manufacturing more efficient, and allow it to offer lower prices. In fact, the experts noted that the new battery tech together with the dry coat electrode manufacturing process could cut the Model E's battery cost in half, which is a savings of $5.500 per car. With that said, the experts shared that the reason Tesla is having such a hard time ramping the 4680 cell production is due to the dry coat electrode process. The company is struggling to produce at a rate that's quick enough to cut costs since the special process is still new and unproven. According to Tesla RT, the experts believe that Tesla can likely have the dry coat electrode process fully implemented sometime in 2023. We've been reporting for some time now that we weren't quite sure what was up with Tesla's 4680 battery program. There have been signs that something was off, or at least that there were details Tesla hasn't yet shared. While we can't report the experts' statements as facts, the information they've reported lines up with the mystery around the 4680 cells. Hopefully, we'll learn more from Tesla in the near future. Source reposted and summarized from Stephen Loveday at Inside EVs. My take: I am confident that Elon will figure it out quickly. Tesla has something big about to happen. September 7, 2022. Tesla had a major shutdown in Giga Shanghai this year, and Giga Berlin has been dependent on Giga Shanghai for exports. Tesla still earned $1.95 per share for Q2 2022. And they will have a good quarter for Q3 2022. What will happen next? There are a new set of worries concerning China. The US has banned the selling of computer chips from Nvidia to China. Tesla has a large neural network of Nvidia chips which is training its full self-driving software. Tesla isn't directly affected by this Nvidia ban. But it won't matter what happens anyway. Because Tesla is building its own computer chips, Dojo, in order to train for its FSD software, as well as future AI projects like Tesla Bot. Tesla has a massive business in China, and Tesla is definitely reliant on China for sales and profits. This will be less over time as new Gigafactories are built and ramp up Giga Texas and Giga Berlin. And any newly announced factories. Tesla's 4680 batteries ramping is the first big thing that Tesla will do. Tesla says that production ramping is about 35% per month for the 4680 batteries. Tesla wants to get the Semi out to customers as fast as possible. The 2170 battery supply has increased greatly due to third-party suppliers, and this is helping the Model 3 and Model Y. Tesla is enabled to switch the Model Y from 4680 batteries to 2170 batteries with non-structural packs. Shouldn't Giga Texas be making Model Y vehicles with 4680 batteries? It seems like a waste to put these in the Model Y, which can handle the 2170 form factor. The Tesla Semi and Cybertruck will need the 4680 batteries in order to ramp up, and those projects should use those batteries first. The good thing is that Tesla has some 4680 battery vehicles on the road already now with the Model Y in Giga Texas and will be able to get validation. The Cybertruck must use the 4680 batteries along with the Cybertruck in order to get the performance and range needed. The 4680 batteries don't have any silicon in the earliest versions. Silicon is used to increase energy density and can store 10 times the energy of graphite. But the longevity isn't as much, and there is more battery degradation. The Tesla Semi will need Tesla's best batteries for range and power. Tesla is also working on FSD to be at wide release this year. This is the second big thing that most people are sleeping on. When Tesla starts to make robo-taxi vehicles and they start driving people around. This is going to boost Tesla and the value of the business. Tesla has a deferred revenue of about $1 billion for FSD. Tesla's price increase shows that this revenue could be recognized as milestones related to FSD are achieved. The third big thing is Tesla's earnings. People aren't impressed with Tesla's Q2 2022 financial reports. Tesla delivered 254,000 last quarter, and that is an impressive number. Tesla delivered 310,000 in Q1 2022. Keep in mind, Giga Shanghai was shut down for a month. Tesla made 98% more money from a year ago with just 25% more vehicles delivered from a year ago. Higher prices affected this, along with more Model X and Model S vehicles. Tesla's expenses only increased 13%. Tesla is going to surprise with its strong growth in the next 2 quarters this year. Be prepared for outstanding numbers. What do you think Tesla will do in Q3 and Q4 2022 for its financial statements? Source reposted and summarized from Jeremy Johnson at Talk News. My take: I suspect there are a bunch of big Tesla things ready to happen. Can't wait. Tesla stock upgraded. September 7, 2022. Tesla stock may not have seen a meteoric rise following its latest 3-to-1 stock split. But the electric vehicle maker seems to be earning quite a bit of approval from Wall Street. Just recently, for one, Tesla received an optimistic outlook from Wolfe Research, which upgraded Tesla shares from market perform to outperform. Apart from upgrading Tesla shares to outperform, Wolfe Research analyst Rod Lache also raised his price target for the electric vehicle maker from $317 to $360 per share. Wolfe raised its EV penetration estimates for the United States from 10% to 20%. Thanks in part to the Inflation Reduction Act. The analyst raised his 2023 and 2025 EPS estimates from $6.12 and $12.70 to $7.40 and $16 per share. The Inflation Reduction Act stands out as far and away the most consequential development for the U.S. auto industry that we've seen in a very long time. We believe that it has potential to affect the entire value chain. significantly changing the trajectory of EV adoption, as well as the competitive landscape and earnings prospects for OEMs and suppliers. We believe that this development is still far from fully appreciated, the Wolf Research analyst noted. As noted in an Investing.com report, the penetration rate for electric vehicles this year currently stands at about 5%. Global EV penetration estimates for 2025, on the other hand, have been raised to 22%, up from prior estimates of 17.5%. It should also be noted that Leish expects the United States government to direct incentives worth about $11 billion per year to Tesla. The analyst assumed modest contributions from Tesla's other products, such as its energy division and newer ventures like Tesla Insurance, Tesla Service and Charging, and the company's full self-driving program. While we remain cautious on several of these areas, especially FSD, the improving outlook within the core auto business supports meaningful earning upside over the next few years. Leish wrote, commenting on Wolf Research's updated rating on Tesla. The future fund managing partner Gary Black noted that Rod Leish actually topped Wall Street's institutional investor rankings for several years. Considering the analyst's comments on Tesla, it does appear that the electric vehicle maker will only gain more momentum in the near future. Source reposted and summarized from Simon Alvarez at Tesla RT. My 12 months estimate is closer to $500 per share.